Good morning and welcome to Missoula Real Estate Today. This is Denny Bedard. Missoula Real Estate Today is presented by Diane Beck of Windermere Real Estate. Diane's been working with buyers and sellers in the Missoula market for over 25 years and shares her insights on the local housing market. Along with her trusted partners, Diane provides complete service for your real estate transaction and brings us guests who provide useful information on industry-related topics and trends. And now, Missoula Real Estate Today on News Talk, KGVO. And good morning. We sure appreciate you being a part of Missoula Real Estate Today. Happy Father's Day to all the daddies. Father's Day weekend going on. And Diane Beck from Windermere Real Estate, our sponsor, has provided us a wily, crafty veteran of Missoula Real Estate Today. I think he's been on here a time or two. Myles Link, residential loan officer with Opportunity Bank of Montana. Welcome back to the show.
Thanks so much. Nice to be here. Yep.
You're not only a guest, but you're an official marketing partner with Diane for Missoula Real Estate Today. How did you two begin working together?
You know, our relationship actually goes back a long time.
Yeah?
There was a time or two, maybe over 20 years ago, I was a claims adjuster, believe it or not. I wasn't even in the mortgage industry. And just through common friends and acquaintances, Diane and I struck up a relationship. And then it was a few years after that I ended up, kind of morphing into a new career in the mortgage industry, and we already had a relationship. And so she was in the real estate business, and we just kind of continued our relationship, but just on a different level as far as a professional level of me helping with any clients that she had. Yeah.
Excellent. Well, that kind of leads into the next one. Some of your background, how long you've been with Opportunity Bank, and what led you to them career-wise?
Yeah, I've been with Opportunity Bank for about seven years now.
Mm-hmm.
7.5 years. Been in the mortgage industry for about 19. Was at a last institution for about 10, and just it was time for change, and looked around, and it's just a wonderful company to work for. Local. We're based out of Helena. We have 22 branches in the state, and it's just good to have a local bank behind you where local decisions can be made.
Yeah. Well, I'll ask you to embellish that a little bit. What else do you like what else do you like people to know about Opportunity Bank of Montana?
Yeah, I think the biggest thing for us is the service. There are a lot of banks out there, and we're based out of Montana. We've been here since 1922. When you are coming in for a mortgage, whether it be residential, commercial, everything, all the decisions, everything's done on the local level. So it's, especially in Montana, folks like that. And I just think it's important. If you have questions on our conventional loans, we service all of those also out of Helena. So if you ever have questions, you're not calling Jupiter, Florida to figure out something on your mortgage and talking to whomever picks up the phone. You can always, pick up the phone, call me, or if you happen to call our servicing department or any of the departments, it's in Helena, and it's just a local bank that treats its customers well and very employee friendly.
Yeah. Well, one size does not fit all. As a residential loan officer, you've probably got a menu to put in front of folks. So types of loans to choose from. What are some factors that you look at to get hopefully the best loan for a potential borrower?
Sure. I think initially the biggest piece that maybe drives you to a specific loan type would be down payment.
Mm-hmm.
If somebody comes in and they may be a first-time home buyer, and believe it or not, we see this more often than not that mom, dad, grandma, grandpa, somebody is giving them a substantial down payment for their first home, and we see that. But if even though that person's a first-time home buyer, if they have a substantial down payment, sometimes some of the those first-time homebuyer loan programs aren't the best for them because they have that down payment backing them. And so I think the first thing I look at really is what do you have for down payment? Do you have the availability to get a down payment or not? And if they do or don't, that kind of steers us to different types of loan programs or low down, no down programs and that kind of thing.
Is there a certain percentage that you're looking for the category you mentioned that, well, even though you're a first-time home buyer, you've got a fairly substantial down payment here. Let's look at some other programs. Is that a percentage thing you look at? Let's say they're looking at a home that costs $300,000. That's pretty close to average in Missoula anymore. You're thinking, okay, you got 10% or you got 5%, so let's let's upgrade you a little bit.
Yeah, and I would say probably that 5 to 10%, minimum of 5. If somebody has 5% down, we're still going to look at some of the other programs, because the last thing you want to do, and the last thing I want them to do, is to just deplete everything they have. Especially when you're buying a home for the first time. It's sure nice to lay down in bed at night and know you have a little nest egg left over in reserve, because it's a emotional and scary thing to buy your first home. And so it is nice to have the reserves. And so if somebody comes in and says, well, I have 5%, well, maybe we're going to look at one of the lower down programs, an FHA loan that maybe is 3.5% down, or another conventional loan that requires 3% down if your income is there. The thing is, with some of those low to no down loan programs, a lot of them have income limitations. And so that's where we kind of go to the next step. Okay, well, I only have X amount down. And then we have to look at, okay, well, what's your income? Because we may or may not qualify for a low down program if your income's too high.
Right.
Yeah.
Right. Yeah. This is Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate. And this week's guest, Myles Link, a residential loan officer with Opportunity Bank of Montana. So, Myles, are you seeing, referring pretty much to the health of the Missoula economy, I guess, are you seeing a pretty healthy number of qualifiers right now, folks that are that can get it done, that you can get it done for?
Yeah, I mean, I think, after the quote unquote mortgage meltdown, people were really nervous about even coming in sometimes to try to get a loan, because they heard on the radio or they heard here and on the streets, it's hard to get a loan and I can't get, I won't qualify. It really, the folks that deserve loans are getting, they were getting loans, and loans are readily available, whether it be low down or no down. And I would say, gosh, I just don't know on a percentage basis, but I would say, of the people that come in to see me to purchase a home, I bet you it's 90% qualify. I mean, it's a high number.
Yeah, that's staggering in my mind. I never would have thought you'd have given me that answer. I thought if you said, we're in that 50 to 60 range, that's pretty good against national averages, but 90.
I would say it's 80 to 90, and I think some of that maybe has to do with, some people kind of know their financial situation, and they just don't come in, is my thinking.
Okay.
But I do think that for the most part, the people that come in, they kind of, there are some people, there are some borrowers that come in and they're maybe on the bubble and not real sure, but a lot of people know, yes, I know I can get a loan, or no, I can't get a loan. And I just think that potentially, and maybe just me, but I just maybe don't seem to see the folks that come in that just can't get a loan.
It's a great point. It's kind of the self-fulfilling prophecy aspect of it. Probably does, thin some of that potential customer base out, because they just know. So why waste your time or anybody else's time?
Mm-hmm. And the other thing with Missoula, as you know, and everybody on the show and listening, is the rents. The rental market is pretty strong here, and the rents aren't inexpensive. They're pretty, they're up there. And so the biggest hurdle for potential buyers is usually that down payment.
Right.
They're already making a substantial payment on a rent payment. And
absolutely.
So they're used to making that payment, and it's just the down payment. And so I think more so, if we can get people in the door and figure out a way to get them into a program with no down or low down, the folks that have been renting, they're already ready to make the payment. They just can't get across that hurdle of the down payment. And there are some programs that can bridge that gap.
Well, lots of people looking for homes, of course, in Missoula right now, which keeps lenders like yourself very busy, I'm sure. What are, if you had to give some advice, what are some of the common mistakes? What are some of the common mistakes loan applicants make, and what advice would you give them to be a little better prepared ahead of time?
I think sometimes individuals, they may not plan to buy a house. And so they think they might want to buy a house, but they're not sure. But they don't really put it on the radar that, hey, we're going to buy a house next year. We're going to buy a house this year. And so what I see on occasion, and is you know, they kind of all of a sudden come up with the idea, gosh, we should look into buying and not renting, or, especially first, I'm talking mainly first time applicants. Um, and then they come in, it's like, well, gosh, you just bought that new car 2 months ago that has a $500 payment. And I think that's where, you really have to sometimes think about the future, what you're going to do, because you maybe could have held off on buying that new car had you known you were going to purchase a home. And it's funny, I do see people come in sometimes that, well, we didn't plan on buying that house, or excuse me, buying a house, or we wouldn't have gotten that car payment, 2 months ago or what have you. So I think planning is one thing. The other thing is just credit, making your payments. One of the misnomers out there is, you have that $30 bill that you didn't pay, and it goes into collection. And a lot of people think that I'll just pay the collection off and then it'll be good. No, that collection stays on your credit for 7 years. It doesn't hit you as bad year after year, but really you just have to, make sure you try to keep the credit, pay the bills. And if you get a collection notice or something in the mail that a bill's going to collection, you need to pay that thing, because if it goes to collection, it definitely hits your score pretty hard.
What you mentioned that the people come in, they weren't necessarily planning to buy a home, but what's generating that spontaneity, if you will? I mean, I guess I don't associate spontaneous with buying a house, but there's a certain element there. What is it? Do they say, wow, there's programs where the down payment is like next to nothing, or wow, look at the interest rate right now, or wow, this market is red hot. It's a great deal on a house. We can flip that thing, no problem. What are some of the factors going in there that you think that causes that people to come in with that idea, kind of not spur of the moment necessarily, but kind of quick?
And I think people that own homes currently, and maybe you're going to just upgrade to a new home, upsize or what have you. I don't see it so much with them. It's more so the first time home buyers that have never owned a home. And I think potentially some of it is, they're renting, they've been renting for X amount of years or what have you. They may hear something on the radio. Hey, there's lowdown. I just heard Myles said there's some lowdown programs out there.
Yeah.
So they may hear things in the media that there are lowdown programs, but also it's funny, they'll come in and I don't know, it's just hey, my lease is coming up. And it starts the wheels turning, like, gosh, my lease is coming up and I'm going to have to renew another year lease. And hey, maybe we should look into buying something, I heard. And I think it's like you said, it's not necessarily, people aren't spontaneous for the most part of buying a home, but I think sometimes they all of a sudden, something triggers that maybe we shouldn't renew that lease. Maybe we should look into buying something. We've seen in the newspaper and on radio, heard on the radio that there's some programs out there. Maybe we should look into that. And I think a lot of that is the lease is coming due and it's the renewal, and it's the time of year, it's nice out, and that's usually your leases are renewing usually in the summer. And those individuals come in and they didn't realize, like 3 months ago when they bought that car, they weren't thinking about their lease.
Yeah.
And it is kind of funny, but I do see that a bit. And it's interesting because on a mortgage, and this is just kind of a general rule of thumb, but every $50 that you have in debt is about $10,000 in buying power. So if somebody comes into my office,
you're going to have to explain that a little more carefully for me.
if somebody comes into my office and they have a $300 car payment,
okay,
if they didn't have that car payment, they could qualify for about $60,000 more in house for that $300 payment.
Wow.
So for every $50 that you have in debt, you've just taken $10,000 off of your buying power. And people don't realize, like, gosh, I have this car payment for $300. Well, if you didn't have the car payment, you just qualified for $60,000 more in house with the same $300 payment you're now paying on a car.
Yeah.
And so I see some of those car payments can get up there with, price of cars or price of homes sometimes in some of the areas. And so that's sometimes a hurdle, and same thing with, of course, new college kids coming out, student loans. And luckily they've gotten a little looser on qualifying folks that have student loans because it got kind of difficult there on student loan payments, too.
This is Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate and our guest, Myles Link, residential loan officer with Opportunity Bank of Montana. Myles, I would like to spend a little time on the intricacies of percentage rates. Who sets those? How do they get set? What are the factors that go into determining what those numbers will be?
So with with long-term mortgage rates, all mortgages are backed by bonds. They're mortgage-backed securities, MBS as they're called, mortgage-backed secured bonds. So they're all tied to the MBS market. So it trades daily. And so that's why we can see shifts in rates. When we hear, the Fed is dropping the rate or the Fed's raising the rate. What that is that's what the Federal Reserve is charging for money, and that affects car loans, student loans, credit cards. It's the short-term money that the banks are borrowing for in-house lending. Doesn't have a direct bearing on mortgage rates. Those are all tied to bond markets.
Mm-hmm.
So simple terms, it's a supply and demand.
Right.
The more bonds that are available, the higher the interest rates are. The less bonds that are available, the lower the interest rates are. And so that's why we see, for instance, in a recession, big pension companies, investors, they don't want their money in the markets, stock markets, and those types of equities that are more volatile because they're getting, beat down. So when in a recessionary period, you'll see the stock market go down, you'll see everybody flee to bonds. Well, as soon as they flee to the bonds, interest rates start to go down because it's a supply and demand. So that's why, in general, when you see over the last couple of years, we've seen the economy really move up and be positive. The stock market's been moving. Well, interest rates moved up as well. I mean, from the fall of 2016 to maybe the last 6 months ago, interest rates went up over almost 1.25% because the economy is doing well. Well, you don't want your money sitting in bonds. You want your money in the market and then that sort of thing. So when there's a sell-off on the bond market to go into the equities, then interest rates start to go up with that because the mortgage-backed secured bond market, it directly affects interest rates.
But it's still a fairly inviting number, right? Like what are the interest rates? Say right now, and I know that can change very quickly, even if it's a fraction or a little tiny bit here and there. But still a pretty healthy number at this point, right?
Yeah, I mean, in general, for most loan programs, of course, it has to do with credit, down payment, things. But in general, interest rates are down in the low fours. Before the election in 2016, interest rates were in the mid threes. So that's to give you an idea of the volatility of the market. After the election, the general consensus of, I'm talking big movers like pension company, pension funds, is, hey, there's a new administration, they're pro-business, the economy's going to boom. We saw a sell-off on the bond market the day after the election in 2016. For the next week, interest rates went up about 0.75% in about 5 days. Because you don't want your money in the bond market, you want it in the stock market. And the stock market went on a huge rally. Interest rates went up because the bonds were selling off. Adversely, when we have negative things happen in the market, 9/11, devastating deal that happens, and then nobody knows what's the market going to do now. There was all kinds of unknowns when an attack like that happens, and interest rates dropped 0.5% in about 2 days. Because the stock market started going down and all the money was moving back into the bonds. So that's where I say the long-term interest rates, we're talking 30-year, 15-year, 10-year mortgage rates are directly tied to the mortgage-backed secured bond market.
And you'd mentioned in 2016, interest rates are about mid threes.
And that's on a 30-year, yeah.
Okay, on a 30-year, mid threes. Since the election, you say low fours. And that's been, for all intents and purposes, about 2.5 years. Is that a lot in that window?
We went almost up to around 5.
Okay, so there's the ebb and flow.
Yes, and I would say, and now we have, Markets are local, which Diane always talks about the housing market, and markets are local when it comes to values and trends. But when it comes to interest rates are global. And so what we're seeing right now the trend over the last few months is rates have actually we've went down maybe a half to 0.75% in the last couple months. And what's caused that is just the things going on globally.
Okay.
The China, things with China, things with Iran. Those things that create uncertainty in the market tend to make some of those large movers move more money into the bond market, and then the rates start to go down. And we've seen a substantial decrease in interest rates, which has really helped the market a bit the last month or two.
Are you seeing any trends in the kind of mortgage loans customers are looking for, or is it still whatever's the best rate I can get to start off with, or are people coming in with maybe some things that they'd heard about or read about a little bit, a specific type of program?
There's always information out there that pops up, whether various sources on the newest, hottest product, and to be honest, and we talked about this. Shoot, it's been months ago, but there's a new program, somewhat new. It's been out a few years now, but it's called Home Now. And it's a down payment assistance program locally here, and it's statewide. But it's there's an income limitation on it. But if you qualify for it from an income standpoint, it's a low to no down loan, because it's a grant or a gift that doesn't require any payback, and that's been a hot product that people. It's not necessarily for everyone because they maybe don't fit the criteria, but it has been a loan that a lot of people call about. They hear it, that kind of thing. We still have the conventional loans, FHA, which is a good low down program, the USDA loan, which is the rural development loan, which is no down, requires you to live outside of the city limits.
Right.
Those loan programs are all still around, but the Home Now loan has been a pretty good loan, and it's been kind of a hot topic the last year or so.
Okay. Missoula Real Estate Today is presented by Diane Beck, and our guest this week, Myles Link, residential loan officer with Opportunity Bank of Montana. Myles, the difference, because I'm sure a lot of people come in and go, hey, I'm pre-qualified, I'm ready to go. There's a difference between pre-qualified and pre-approved, right? What are some of the differences in that?
Yeah, and some people come in and they just want numbers. So they want me. They're going to come in. They may bring pay stubs, W-2s. They may not, but they want the numbers to see. Okay, here's my income. Here's my debt. Here's what I have or don't have for down payment, and we kind of lay it, all out on paper for them to see. And they want to know, how much can I qualify for? What's my payment going to be? That's really kind of your pre-qual situation, where they are just kind of, they're getting numbers and given your income, given the debt that you're saying that you have, the down payment. Here's the approximation of what amount you would be approved for. That's kind of the pre-qual. The pre-approval is taking it the next step, and that's actually getting the physical documentation, pay stub, whether it be pay stubs, W-2s, tax returns, pulling, and then actually going ahead and pulling the borrower's credit. So we're pulling the credit. We're looking to make sure the information we have on paper matches the credit report. So yeah, you have these debts, and we're actually, whether it be conventional loans, FHA, any of the loan types, they all have automated systems now. So we take all the information we have and input it into the application on a loan on our system, and then we run it through the automated system. So if somebody says, hey, they maybe fit best into an FHA loan, then we get all their information, we pull credit, we run it through FHA's automated website, and then it comes back approved, assuming that the data entry is correct, that this loan should be is approved on an automated system based on the information. And that's the pre-approval, because you've already seen their bank statements, you've seen taxes, pay stubs, you've pulled credit.
Yeah.
That's the full pre-approval, and that's really what agents are looking for when they're going out and showing folks homes. And then when they're putting in an offer, especially in a competitive market that we've seen over the last 18 to 24 months where, some homes have multiple offers, you really want to go in with your best foot forward with that pre-approval letter with your offer, because the seller if you're competing, the seller's going to look at that best offer, and that sometimes could be the tipping point.
Hey, a special thank you to some of Diane's marketing partners that help bring you Missoula Real Estate Today every weekend. Rob Fleming with Man Mortgage, Carol Blodgett from MakeItMissoula.com, and Myles Link of Opportunity Bank of Montana. He seems like a pretty good fella. You used an example a while ago that was really interesting. I thought very good. If you did not have, let's say, a $300 car payment, how much more home you could qualify for if you didn't have that. What is a good debt to income ratio? You want to be sure you can actually afford the place, of course.
Yes, and everything's an automated system now. So depending on, so it weights, and every loan type does. It weights credit score, down payment, debt to income, and gives us that approve or not approve.
Right.
And so oftentimes, and I tell people this, we can oftentimes approve you for more than you feel comfortable with. So when somebody comes into my office, the first thing I ask them is, what payment have you thought about that you feel comfortable with?
Yeah.
Because ultimately, just because I can approve you for more doesn't mean you feel comfortable making that payment, as you may have other lifestyle choices that you want to spend money on.
And then probably most people have that predetermined number in their mind, don't they?
They do. And so how I usually start it is I take that number and then I backdoor into, here's the payment that you want and here's what it equates to in home, purchase.
Right.
Oftentimes the two don't correlate. But that's where we start, and then we kind of work from there. Yeah. The debt ratio is really, we can get some loans to go up to 50%. Does that mean a person feels comfortable at 50%? Meaning 50% of their gross income is going out for bills? That doesn't necessarily, just because we can get you approved there, doesn't necessarily mean that that's the best thing for that individual.
Of course.
I would say, safely, we want to see, and this is kind of the guideline when it used to be loans were kind of manually underwritten. So there used to be times where there weren't automated systems. And so underwriters and that, they would go, oh, well, this person's debt ratio is 42 and this program is 41. They don't qualify, that kind of thing. And so there's programs out there that do have debt ratio limitations. Some of the special low down, no down programs, they have some debt ratio limitations. And so I would say a safe housing ratio, so how much is your house payment according to your gross income, probably like to see it around 30.
Okay.
On that end. So 30% of your gross income, we always use gross numbers, is going out for house. That's a safe number.
Yeah.
Lower the better. And probably for your total debt, so that would include anything else, car loans, student loans, credit cards. It already takes into account you're going to have utilities. Probably around 40 is about the top end. If you can stay below 40, you shouldn't, mid-30s to 40, you shouldn't see a huge change in lifestyle, hopefully, at that debt ratio.
Well, believe it or not, time's almost up. Before I let you go, how do they get a hold of Myles Link with Opportunity Bank?
Yeah, the best place to get a hold of me is on cell phone. I always like that. It's 406-544-5115. We have a website, opportunitybank.com. All of our loan officers are on that statewide, so I'm on that as well. And we're at 2800 South Reserve.
Appreciate you stopping by. Thanks.
Thanks so much, Danny. Nice to see you again.
Thank you for listening to Missoula Real Estate Today. We hope you found this morning's information to be helpful. If you have any suggested topics for any future Missoula Real Estate Today programs or any questions about buying or selling, contact Diane Beck with Windermere Real Estate. Email dianebeck@realtor.com or visit her website, homesinmissoula.com. That's homesinmissoula.com. We'll see you next time on Missoula Real Estate Today.